happening in the US? What's keeping people in the market?
I think there's a lot of complacency in the market at the moment. I think it's a lot to do with the fact that everyone has been expecting some sort of resolution and have been a bit fearful to either be coming out and reducing their positions or indeed be caught short. And of course the last week that we've seen in the likes of the US indices, that has obviously burnt a few people's fingers, and I think that's why we're seeing a certain amount of caution and I suppose a bias to the upside. You'd say markets do seem to climb a wall of worry, and that's what we have seen. But as I've always said, really, I think the debt ceiling is actually the line in the sand that is drawn by the US government. It's not something that really affects the global investors. It's mostly the political stalemate that is creating the problem, and any sort of political instability from the biggest economy is obviously a problem for the global economy.
But when will the short sellers really start to kick in, do you think? What's going to be the trigger for that?
I think we need to see probably a larger sell-off in the Dow Jones and the S&P 500. I think we saw it test the 200-day moving average on the Dow Jones quite recently. It was a very short-lived affair and we bounced from there, but any close that we see below that particular average would probably bring the sellers in, and I would say it'll be a little bit more of a bias to the downside. A little bit more panic selling might take place around that particular level.
All right, and what about this Fitch move? What does it mean to you? Is it anything other than rating agencies wanting to be seen to be proactive now?
I think that's a lot of it. I think they've been accused of sitting on their hands for a while and being reactive to moves and being behind the curve. So I think Fitch is just hedging their bets a little bit. They do expect to see the debt ceiling raised, but I think what they've pointed out is that the political stalemate and the shenanigans that are going on there that is causing this uncertainty in the market, and any feeling that the US could default, an unlikely event certainly, is going to cause upset in the markets. You've got the likes of the IMF calling on the US to get their act together, and now you have China, one of the biggest holders of US debt, also doing the same. So when you have those big movers in the markets making inroads to the US to get their act together, then you have to sit up and take watch.
All right. In the UK, Mark Carney has made unemployment numbers, of course, critical here, a key metric here. I'm pretty sure you believe the Bank of England is going to be one of the banks to blink first, right?
I do believe so. Obviously the markets are pricing in a rate hike as early as 2015. I think it could happen actually sooner. I think there's an element of heating in the market which is obviously apparent in the housing sector at the moment, and the Bank of England will need to be proactive when it comes to this rate hike that is necessary, particularly when you look at inflation. I think the Bank of England are very dependent on the fact that it is quite deflationary in the rest of the world, particularly in the Eurozone, and they're hoping that will feed into the economy here. But for the most part, I do feel that there is a lot of bias on the upside for sterling, and if we do see some LTROs taking place from the ECB, that will likely send sterling that bit higher, and of course any sort of uncertainty surrounding the US dollar will also make sterling quite a key player in the safe haven.